Welcome to Market Day Report. We're starting our market trek this time by looking at a chart. Now, this is new crop corn. Wanted to look at what's happened over the past 5 days. Sometimes when we back it up and look at a 6-month or a 1-month chart, it doesn't always tell you what this does. I mean, trading well above that 505 level on Wednesday. We hit that early on Thursday, and then something started happening, and we started losing ground till we tumbled by the end of the session on Friday. And then, bam, we get excitement, and we start building it back up. And that's corn, which right now trades $4.98 3/4, up 3/4 of a penny, and that's right under the word December 26 corn. Let's look at November 26 soybeans. Same story here. Now it's trading at $12.05 3/4. It's up 4 3/4 cents. And over the past 5 days, we've gained a little over a penny. But look where we had to go. Our guest here is Chris Swift, Swift Trading, and you look at that, and I guess the best way to describe that, it's like handing the ball to somebody, and they run back and forth. They run east and west for a long time, but they never run north or south. In other words, we're covering a lot of ground, but we're not moving the markers.
Not moving forward, but we still got a lot of growing season. Planting still, about 50% of corn and beans. I keep looking at the drought monitoring through the Delta, knowing that will impact beans more than corn. We have some really dry weather in the western portions of the Corn Belt. Center of the Corn Belt probably couldn't look any better from a drought perspective map goes. And then wheat. Wheat continues to be the story because it is so dry. We've heard of a lot of fields being torn up, and now we have some issues of world wheat maybe situation. So everything is just kind of, I liken these markets to fledgling. They're just fledgling bull markets, and they may really grow into something bigger, and they may not. But while they're just fledgling, if they do grow, we might want to be doing something about it now for our livestock feeders and stuff that it's going to have corn and going to be looking out into next year. Whatever troubles that we have with this year's crop becomes more exaggerated the next year as we get into the old crop.
I'm going to throw kind of a curveball in here as we look at the markets and where we're trading right now on the big board. Sorghum inspections improved to 5.6 million bushels. China, again, listed there, 5.1 million of those bushels across the Gulf Pacific and interior. That's really not part of the story here, but the story is if sorghum is finding more demand internationally, that means we might have a little bit more corn here. How does all of this factor in, especially for feeders? I know we're not feeding sorghum for the most part. You know, most feeders are going to want to run corn through there. A little easier to flake, right?
Well, it's a little, what they would probably use sorghum for would be silage. They'd got for sorghum silage on there. And probably the acres wouldn't be enough to really damage the corn crop any, and most of that's grown very far out west there. So primarily cattle feeders that I know of, they're going to grow sorghum, and it's going to be more for a silage crop than it would be the grain. But seems like I heard something about maybe an ethanol product out of grain sorghum that is possible.
Yeah, and we do have those ethanol plants in Kansas and Texas that are actually running sorghum through.
Okay.
And again, you get the DDGs out of that, or the wet distillers grains at this point, because a little easier to just haul it across. You don't have to dry it. But anyway, just something to keep in mind, I think, as we look at this whole space. Speaking of this space, how about we come back and we'll talk livestock futures. We got Chris Swift with us, Swift Trading, and we're back in a moment with more Market Day Report. How about we look at livestock markets? We'll start with the hogs. Lean hogs trying to move higher today. They've been lower 3 straight sessions. June contract is now squarely in that 98 range. Still 103s for July and August. Again, just slight gains here as we get rolling. Feeders, yeah, we're still positive here. August through November. That May contract will expire in less than 2 weeks as it chases the index. 368.75 on it. It's a nickel lower. Buck higher on the most active August, 359.85. Then over to live cattle. You know, since Chris was in the studio last week, well, we've been trading cash at what, 265? Well, live cattle futures, 253.75 on the June. That's up 37. It's almost as if you're having to drag that along. So I'm going to start with the question, cash or futures? Who's going to win this battle as we start our way towards expiration in June?
We may know that Friday with the cattle on feed report. So there is some expectations of a little bit heavier placements, maybe as high as 108 to 112 placed in the month of April. And I saw that from the weekly feeder cattle and stocker sales that USDA puts out every week. And we noticed that every week was elevated over 2025 in volume. So naturally, not all of those cattle will go on feed, but because of the drought, a larger percentage of them will, and I think that's where we're going to get the cattle from the placement side. The on-feed number, maybe a little over 102. If that is it, maybe 11.5, 11.6 million head on feed, and the majority of that is from the low marketing number, guessed at about 90%. So what we're seeing is the cattleman is still very bullish cattle because there's fewer cattle, but the rest of the world that eats and consumes beef is sitting there going, well, I'm not real sure I want to pay that price for the cow to get that beef, and that's where we get the divergence. So not only do we have divergence in price, we have a lot of divergence in attitudes too, or mentalities, not attitudes, but mentalities between what we think the price of a cow is worth and what others think the price of a cow is worth. The futures are what others think that they're worth. The cattleman is where the cash side of it is, and or packer, or either one. So we're going to have to do something. We're at a big top. We're having a difficult time pushing through to new highs, but we're not going any lower either. So kind of like the soybeans there, we're going back and forth. We're going left to right. We're not going forward or backwards right now. So it's going to be testy for a little while.
Cattle, yeah, and I want you to look at it from a traditional perspective, not a more recent. We put a calf into the feedlot. How many days are we going to keep that calf on feed?
Probably 175 to 180 now. And when you mentioned that, the first thing that came to my mind was abnormalities. We are dealing with so many abnormalities. The profit margins that cattle feeders have seen, the losses that packers have seen, some of the losses that cattle feeders have seen recently, and the extremes of price that they have to go to just to find that margin, or creates even worse. So abnormalities are everywhere in our life, and it's going to be very difficult if things start going back to quasi-normal.
And you throw in a beef on dairy cross, and those things are on feed 200 plus days. What, 240, I think, is what I saw, 240, 250.
And that is a well-oiled machine. Those guys are just absolutely continuing, and I may be wrong, but I think now 22% of all cattle on feed have a dairy influence of some kind to them. That's phenomenal. 18% less than 2 years ago. So imagine how much growth that 4% is just in 3 years.
Yeah, very interesting. Yep. But it's keeping this
It's the only thing that's keeping alive right now, because we shut the border down. We're having to import more meat. So were it not for that beef dairy, we'd be in bad shape.
Yeah. Chris Swift, he's with Swift Trading. So good to see you.
There's always something new to talk about. When you visit us once a week, that's how quickly the headlines move. So you can just hang out here all the time. Thank you both.